You know, the new Trump accounts are quite interesting. If you start one of these funds for a young person, it really introduces them to the financial markets in a big way. So if you pause your video player, it kind of shows a comparison is that by age 18 for children that are born in 26, that if they max out by 18 they'll have 303,000. By 28 they'd have over a million. So it's an interesting concept, and I think it's a good thing for the country. You know, we're all looking for keepers. We want to find a stock that we can keep forever. However, easier said than done. You know, buy and hold works some of the time, and when it doesn't work, you have a problem. But this is a picture of my son. He just moved to Michigan, and he caught his first fish. It's a keeper. So we have to balance risk. You know, risk management is incredibly important. And so what this breaks down is different levels of risk. So we tend to stay in this area here, which is, you know, large and small cap stocks, which is basically on the somewhat riskier side, but we think that's the way to go. Now, when you think about, you know, risk-based thinking, you have to balance. You have to balance. So in other words, we buy usually the maximum number of stocks we'll buy is 10. Now, of the 10, we know that there's going to be 1, 2, or 3 that are pretty much going to drive our returns. If you look at our historic track record, we started our model portfolio in June of 1995, and it's done quite well, but the bulk of the returns came from 3 stocks. It was Amazon, Apple, and Tesla. So you've got to find the right growth stocks. They have certain patterns, of which one is higher volatility. You have to realize that growth stocks are 2 to 3 times more volatile than the market, so you really have to stay on top of them. And so I wanted to bring back the red dress story because it says here investing in the stock market is really like no different from running your own business. So the story goes on where the owner of a store buys 3 colored dresses, yellow, green, and red. However, the yellow dresses aren't selling, the green dresses aren't selling, but the red dresses are selling. So the point here is that when you're building your portfolio, you want to stick with the winners and get rid of the losers. Really important. So let's take a look at the market right now. We continue to see, you know, good behavior here with the NASDAQ holding above the moving averages. You know, volume yesterday was somewhat low. Now we're probably going to have a rough day today because of the Broadcom earnings announcement. S&P 500, same thing. We're in good shape there. The aggression index, you want to remember here, the aggression index gives a sell signal if we break below the moving averages, and so that's not happening. So the market is basically staying in somewhat of an aggressive mode. The biggest problem we're seeing with the market right now is too much concentration in technology. We'll talk a little bit more about that. Interest rates are the other problem. In the last 125 trading days, the yield on the 5-year Treasury has climbed almost 15%. So this is pretty much flagging that the Fed may raise rates. Now, what I said earlier was that the concentration in the NASDAQ 100 versus the S&P has gotten to be somewhat extreme. So I would be careful here and, you know, monitor things closely. I would also not have tight stop losses, but I would have stops. And, you know, a stop loss can also be a stop gain. You don't want to lose your profits. Here's the primary trend for the S&P is up, and for the NASDAQ is up. Oil prices are, you know, somewhat trying to stabilize in this $90 area. You know, we spiked up to around 112, but with the war going on in the Strait of Hormuz, this is going to continue to be a thorn in the side. The other problem here is we're starting to see a pickup in the new lows on the New York Stock Exchange. Anytime we get above 40, we get concerned. Now, we want to see a couple of days of this, but it is a concern. So the sellers are kind of showing up here. Sentiment, however, and I think this is really an important indicator right now, you know, sentiment continues to be somewhat pessimistic, which is not typical of any kind of bubble that I've ever seen. Now, everyone's concerned about a bubble in the semiconductor stocks, but I'm telling you, they are just continuing to stay strong. Now, today's going to be a difficult day, so we'll have to see what happens. But all in all, monitor your stops. Hold on a little bit of cash here, kind of slow down a little bit. So if you have any questions, please let me know.